Can everyone see the presentation?
Yes.
Great. Okay, so welcome to everyone. So before we get to discussion, basically two topics to talk about. One is the budget that was passed and future budget gaps, and then the federal relief funds that are coming in. So first, we're now in the third month of fiscal year 2022, and unlike a year ago, Rhode Island does have an enacted budget passed by both chambers and signed into law by the governor. It's a budget of $13.1 billion, of which $4.5 billion come from general revenue sources. And we can compare this budget to, in two ways. One is to compare it to the budget, the enacted budget for fiscal 21 that was enacted last December. And so comparing enacted to enacted, in that sense, the budget's a little larger, both overall in terms of general revenue. But if we compare it to the final budget for fiscal 21 that ended in June 30th, it's smaller than that, though more in general revenue, because the federal relief funds were used, other adjustments were made that lowered that amount of general revenue funds for the final fiscal 21 budget. And just as a side, before talking about the budget, so the amounts that, in terms of designing a budget, the amounts that the governor and the legislature has to allocate for the budget depends on the conclusions of the twice per year caseload and revenue estimating conferences. The revenue part of the conference considers what taxes and other revenues are coming into the state, and caseload considers the enrollments in various programs such as Medicaid in order to understand or to estimate the state's obligations. So just want to note that this year there were changes made to the caseload estimating conference. So now BHDDH will be required to report monthly data to the conference or the conferees. And this includes enrollment and costs for the community-based program for people with intellectual and developmental disabilities. Up until now, the caseload has included only DHS and EOHHS programs. We don't know yet if BHDH will be required to testify at the twice-a-year conference about and to forecast what the enrollments will be. That's not, the statute itself only refers to medical assistance and public assistance. So, but we're just going to follow up on that and figure out if they will be testifying as well. So you may have seen recently in the press reporting about a $51 million increase in state revenue for fiscal year 21. And indeed on September 1st, Rhode Island's Office of Accounts and Control released its preliminary closing statement for that fiscal year that ended June 30th. The final closing statement's usually issued in following January. And although the closing statements for this fiscal year that's already over, it does have consequences for the current fiscal year and current budget for fiscal year 22. And when we say there was a surplus, and originally it was a surplus of 281 million, the 51 additional million makes 332.4 million. It's a surplus compared to that May revenue estimating conference and caseload estimating. What the representatives from the administration, the House and Senate fiscal offices, what they determined were the expected revenues in caseload for the year. So it's compared to that, that the initial estimate of a surplus of 281 million, which was used to create the fiscal 22 budget that was passed. So even in that period of only under 2 months, the estimates went up. So this closing statement shows another $51 million added to that. That's not quite all additional revenue, the 332. It involves some other transfers and adjustments and calculations, but that's the I guess better outlook since the May revenue conference. And just to note about the rainy day fund, you'll recall that in the spring of 2020, the legislature took out $120 million from the rainy day fund to help fund response to the coronavirus pandemic. And through this sort of weird thing of Rhode Island law, that money doesn't have to be repaid, but not to the rainy day fund. It gets paid to the Rhode Island Capital Fund. That money has now been, repaid in full. There was originally planned to do that over 2 or 3 years. That's been repaid in full. Money was, as per statute, taken out of the general revenue for fiscal 21 to put into the 3% taken annually, put into the rainy day fund, which is now almost at its maximum, which is about 229 million is the max. Now, again, compared with those revenue estimates, just focusing on the revenue piece of that, the actual revenues collected compared to what the conference anticipated was about $214 million higher. That was in a variety of forms. You see, personal income tax collections were about 5% above expectations, sales and use about 4%. But one of the big things, business corporation tax was actually 75% above. So both in percentage and amount, 87 million was higher than expected, and which would seem to indicate that despite the fact that many businesses indeed have suffered, many have closed, that some have been doing well enough that they could pay taxes or more than we expected. And I should also note that even though it's a lot here compared to the other two, in the global picture, the personal and sales tax buckets are much larger. They're both over $1 billion per year, whereas the business corporation tax is more in the $200 million range. So the personal tax income and the sales tax are paying for account for much more of general revenue. This slide we shared at the May revenue roundtable, but without that middle purple line. And this shows the bottom line showed, the dashed blue line showed what the out year budget gap estimates were pre-pandemic. So when the governor files a budget, they have to provide estimates for what the out years, the next sort of 4 or 5 years, what those deficits look like. And so those were, that's that bottom line. And then after the November 2020 caseload, so in the middle of the pandemic already, the estimates went way up, well above $300 million per year for fiscal 23 to 26. So now with the House Fiscal Office's most recent calculations, with a lot of the improved revenue picture that came out even in May, and now we've had more since, the estimates are much lower. They're in that sort of $200 million range in these out years. So they're lower. They're still substantial, indicating ongoing structural issues, but lower than expected. And I should note a couple of things. One, these numbers do not include the one-time federal relief aid. So I think we could expect some of the American Rescue Plan funds we'll be discussing shortly will lower those deficits for the next couple of years. And might also note that the car tax phase out, which we're in, I think is year 5 now, of the phase out, requires the state to reimburse the municipalities for the lost revenue for phasing it out. And when that's done, that will result in an ongoing annual cost to the state of close to a quarter billion dollars. And so that sort of $250 million or so itself is, more about size a little more than this structural deficit that's ongoing. And so, I mean, I'm not saying we're to reinstate that. In principle, one could reinstate a car tax in a more fair way with a single statewide rate and valuation process. But working out such a plan would not be simple and probably wouldn't gain a lot of support. But in any case, I think the point to take away is that we still have these structural issues. The federal relief funds are temporary and won't resolve those. And so we need to think seriously, and we need to think now about raising additional revenue and not wait until the federal funds run out. Okay, so talking about the federal relief funds, let's turn to those. So this table here, we also shared in the May roundtable. It shows relief funds divided by source or relief package, the CARES Act, FEMA money. And the state now has a transparency, the COVID-19 transparency portal that doesn't break out spending by sort of relief package like this, but still provides a lot of information, breaks out in other ways. The website is at the top of the slide here, the transparency.ri.gov, and just want to share an example from that of the data graphics that they're presenting there. They provide for different categories, and it's all the relief money put together from the different sources, and they have different images for or graphics for businesses, childcare and education, health response, individual support. This example is for the healthcare. This example shows how the healthcare institutions are by far the largest beneficiaries of the COVID-19 relief aid. Some of the hospital systems are the largest circles in this image. There are other tables and charts at the portal that show, at least as of early August, that the state had spent 1.63 billion in federal relief funds and had encumbrances of another 81.4 million. Encumbrances are basically commitments that to pay for services or goods, but they haven't been invoiced or paid yet. So now to the American Rescue Plan Act, the most recent, I guess, bucket of money or buckets. And there's going to be about $2.5 billion more in federal aid coming to Rhode Island, some of which is here already. And there are basically two types of aid. There's targeted aid, money that's specified for particular purposes, for rental assistance, childcare, education, different things. And then there's the more flexible buckets of funding. That's generally referred to as the federal relief funds, or FRF. And when we hear talk about how is the state going to spend its relief money, I think people are mostly talking about that, the $1.2 billion that Rhode Island has. And then there's an additional $542 million that go to cities and towns for that response. So when people are asking about how is the state going to spend the money, that's what we're talking about. We sort of know generally where the targeted aid is going. Last month, we here at EPI released an infographic showing some details of these relief funds and how they flow from the federal government. And in terms of distribution, there are basically two methods. There's direct funding and funds that flow through the state. So on the right side here, you see the direct funding. So the 6 largest municipalities in the state and the higher education institutions, they receive funding directly from the federal government, their portion of the relief aid from the American Rescue Plan. And then everything else goes through the state. That 1.2 billion of general funds, or the more flexible funds, is on the top there. The 1.13 billion for the state, and the 113 million under that for state capital funds. Those together make up that 1.2 billion. You can see the other funds. A lot of it just flows through the state, like go to the local education agencies, and so the legislature and governor are making allocation decisions there, but from an accounting perspective, those monies, and also the smaller cities and towns, there's also a level of funding for counties, but since we don't have a county government system, those also go through the state to the other institutions or local governments, and that's how the monies are sort of flowing through the state from this relief plan. In the last few months, the Treasury Department has provided guidance for how to use these funds. And again, talking more about that 1.2 billion for Rhode Island, the flexible funds. There's public health expenditures to counter negative economic impacts from the pandemic, replace lost revenue if the state can demonstrate a loss of revenue due to that, helping essential workers, and investing in a limited number of kinds of infrastructure projects for water, sewer, and broadband. The guidance also encouraged that the use of the money should help address disparities, both public health and economic disparities, to do things like make housing more affordable, promote healthy childhood environments, to try to make the recovery more equitable and inclusive. And so that's some of the guidance from the Treasury. There are certain things the funds cannot be used for, can't refill, you can't help put money into pension funds, put into the rainy day fund, service debts, pay for legal settlements, do other infrastructure, or offset recent tax cuts. Now, So how then is Rhode Island spending its $1.2 billion? There have been some efforts to consider how best to invest these funds. The governor has hosted these 2030 conversations on Facebook for input. Rhode Island Foundation's had its Make It Happen initiative that EPI and RIPEC have staffed, and the report for that project is expected in mid-October from the 15-member steering committee. But in answer to the question of how has Rhode Island spent the money, it hasn't. In the fiscal 2022 budget, no funds were appropriated. Some of those targeted funds did go through, but this big bucket of the more flexible spending has not been appropriated at all. And one of the big questions I think many of us have is, will the Governor General Assembly enact some sort of supplemental budget in a special fall session, perhaps, or early in January to start using some of the money, but sometime before the fiscal 2023 budget is produced in whatever, 9 months or 10 months or so. And just to put this in national context, Rhode Island is actually one of about 17 states that have spent little or no, none of these flexible funds. There are 4 states, California, Hawaii, Indiana, Montana, that have spent their entire set of funds, but Rhode Island's one of 17 that have spent nothing. This slide shows the Treasury guidance for what the reporting requirements are for the American Rescue Plan funds. Just to cover on the bottom, it says any user non-entitlement units of government, and those are basically local governments, usually populations under 50,000. But you'll note that there were 2 reports that were due August 31st, an interim report and a recovery plan performance report. I have not seen the interim report, but given that it's about expenditures and we haven't spent any of those funds, I wouldn't expect to find much of interest in that report anyway. But the state did file its recovery plan performance report that was due on the 31st. And this language is from the Treasury guidance about what this report should do. It's supposed to provide information on the projects that are being undertaken and how they're being done, and also include performance indicators, some of which identified by the feds and some by the state. Whoops. Okay, so again, Rhode Island filed its report, and the executive summary begins: through a collaborative and deliberative process, the state is working to ensure that funds will be used equitably and for the highest and best purposes. The report, it's about a 10, 12-page report. It shares info on how some of those targeted funds have been used from the earlier relief bills. It discusses the process of how the state's been engaging government and non-government partners, including something like the Make It Happen effort. And it includes a matrix for evaluating possible uses for the funds, what sort of questions should be asked and answered when determining if a project is fulfilling the goals of the funding. It doesn't include any of those performance indicators because we don't have the spending to do those sorts of measurements yet. And then finally, the report discusses prioritizing and promoting and measuring equity. It talks about focusing on the negative economic impacts and responding to those, and delivering services to communities that have been disproportionately impacted by the pandemic. And again, these are commitments. We don't have the details obviously yet, but we should be watching out to make sure that the allocations in the end do fulfill these goals and promises. And that's all I have. If there are any questions before we get to the discussion, feel free to ask. And of course, as usual, stay connected with the Institute. I'm going to stop sharing my screen for the questions and the discussions.
Great. Thank you, Alan. Do people have technical questions they want to ask before I turn off the recording and Jim?
Thank you, Rachel, and thank you, Alan. That spike in business income, piqued my interest. Is that all taxation on business income, or are there other aspects of the business corporation tax other than profits that local businesses are making that's driving that huge increase?
I mean, that bucket particularly is the specific business corporation tax. So I don't think it's including other things, as you're suggesting. It certainly wouldn't include, say, some of this pass-through income that may appear in the personal income tax. And there are other things like the insurance payments, other parts of the larger corporate tax, but this is that specific line for business corporation taxes. Yeah.
And I think it's just worth noting, they're estimating what they expected to receive, right? And this is what they actually received from the preliminary report. So it could just reflect they underestimated the number of businesses that might close and no longer pay taxes, or what the revenue would be for the businesses. So it's not like all of a sudden things spiked, right? The budget stuff is always, we're going to do the best we can to anticipate the revenues that we're going to have, but then we're also going to look at what actually came in.
Yeah, and their estimates are based in part on, I think, national trends and reports from a contractor the state hires to provide that larger contextual picture of what's going on.